You know, when a Wall Street giant like Goldman Sachs makes a big call on a company, people tend to pay attention. Well, their latest report on the brokerage firm Interactive Brokers is definitely making some waves. And today, we're going to break down exactly why Goldman is so bullish. Let's get into it.
All right, let's just get right to the headline. The single biggest thing you need to know is this. Goldman isn't just slapping a buy rating on Interactive Brokers, or ibkr, as we'll call them. Nope. They're actually boosting their 12-month price target up to $74. That's a pretty serious vote of confidence. So for the rest of this explainer, we're going to unpack the data that got them there.
So first up, let's dig into the upgrade itself, because it's about more than just a price target. It's about a real shift in how they see the company's finances playing out. And this gets right to the heart of it. This upgrade has a direct impact on future profits. Goldman is bumping up its earnings per share, or EPS, estimates for the next 3 years straight. Now you might think, 3 to 4%, what's the big deal? But for a company this size, that's a huge signal. It tells you they believe IBKR's profitability is on a really solid upward track. Okay, to really get why Goldman is so optimistic, we've got to quickly break down a couple of key industry terms. Trust me, they're the building blocks for this whole story. First up is a term you'll hear a lot, DARTs. It stands for Daily Average Revenue Trades. The easiest way to think about this is like the heartbeat of a brokerage. It's the count of all the trades happening every single day that actually put money in the company's pocket. Simply put, more DARTs means more business. And the other side of that coin is CPT, or commission per trade. So if DARTs tell you how many trades are happening, CPT tells you how profitable each of those trades is. You see how they work together, right? It's the combination of these two things that really fuels the whole commission engine. So all these trades, where are they coming from? Well, that brings us to the first huge pillar in Goldman's argument, just an explosion in customer growth. Just get a load of this number, 92,000. That's how many brand new accounts Interactive Brokers added in the month of July alone. This isn't a small trickle. Goldman sees this as a flood of new customers. And really, this is the fuel for everything else we're about to talk about. And look, this wasn't just some flash in the pan for July. We're talking about sustained growth. A 32% jump in total accounts compared to last year is already amazing. But what makes this really pop for analysts is that it's well above IBKR's own top-end guidance of 20 to 25%. They're literally beating their own best-case scenario.
And to put that July number into perspective, it wasn't just a good month. It was 17% better than their average over the last year. This is a huge deal because it suggests that the pace of growth isn't just steady, it's actually picking up steam. And the story gets even better. When you look at other clues, what we call leading indicators, things like app downloads and how many people are actually using the app each month, well, they're on fire. Downloads are up 48%, active users are up 47%, and both of those numbers are more than double their 2023 averages. It all points to this growth wave having some serious legs.
Okay, so a ton of new customers are flooding in. Awesome. But the next logical question is, what are they actually doing on the platform? This brings us to the trading activity itself. So if you peek under the hood at what people are trading, you see a pretty big chunk. Almost 40% is in futures and options. Now, these are typically more complex products that bring in higher fees. But here's the interesting little detail. That slice of the pie actually got a tiny bit smaller in July. And this is where the story gets a really fascinating wrinkle. While those super profitable futures and options trades dipped a bit, good old-fashioned stock trading was actually up by 4%. So this might hint at a shift in who's using the platform, but as we're about to see, that's not a problem at all. Why? Because even with that little shift in the mix, the big picture is what counts. Total DARTs, the total number of paying trades, still came in at over 3 million a day. That is a massive 24% increase from this time last year. So basically, the raw volume of trading is just crushing it. So here's the bottom line. Even with slightly fewer of those high-margin trades, the company's revenue engine is just humming. They're pulling in $8 million a day from commissions. And get this,
The average commission per trade, the CPT we talked about, it actually went up by 4%. More trades and more money per trade, that is a recipe for success.
All right, so we've got more customers, they're trading more than ever, and it's leading to some really strong revenue. Now let's see how Goldman crunches all those numbers into their final call and what they're warning could go wrong.
This little table really shows you the impact of all that data. Just look at the year 2026. Goldman is adding almost $150 million to what they thought revenue would be, and they're boosting their earnings per share estimate to $2.05. This isn't guesswork. This change is a direct result of the strong monthly numbers we just walked through. And this quote from the report basically spells out the why for us. They boosted their forecast for two big reasons. First, all that commission revenue we just saw, driven by those great DARTs and CPT numbers. And second, something called net interest income, or NII. That just means they're making more money from customer cash balances and lending, both signs of a really healthy, growing platform. But okay, let's be real. No investment is a sure thing. And Goldman is very clear about the potential bumps in the road. If that amazing account growth starts to slow down, if people start trading less, if interest rates get cut quicker than everyone thinks, or if the market just goes sideways, well, this whole rosy picture could definitely change. It's just a good reminder that this forecast depends on these good times continuing. And all of this brings us to one final huge question. So much of this incredible growth is coming from outside the US. We're talking 85% of new downloads and 80% of active users. Now, that global diversification has obviously been a massive strength. It's been the engine. But the question you're left with is this. Is that huge global footprint going to continue to be their biggest asset, or could it eventually become their biggest challenge, exposing them to all sorts of different economic and regulatory risks around the world? That's really the key thing to watch as the story plays out.